Welcome to This Week in Money. I'm Jim Goddard. Today, Chartworks CEO Ross Clark tells us sector rotation kept the market alive. He sneaks a peek at what the first quarter of the new year might bring. Venable Park Investment Council President Danielle Park says Christmas is no excuse to forget about the fundamentals of sound financial management. She says sooner or later a recession is bound to hit. Wall Street Window's Mike Swanson delves into the mania surrounding Bitcoin and the hype that has taken on a life of its own. Plus, at the end of the show, we'll have company showcase updates from American Manganese CEO Larry Reaugh, Cypress Development Corp President Don Huston, and Glance Technologies founder Penny Green. We'll talk to Ross Clark in a moment.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic Engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark. He's the CEO of Chartworks. Welcome back to the show, Ross.
Pleasure to be with you, Jim.
The U.S. and Canadian stock markets, a rabid kind of reaction Friday morning when they heard the news that former security director in the U.S., Michael Flynn, had pleaded guilty to lying to the FBI. But both of us are wondering, what does that have to do with the markets and why this reaction? And do you think things will stabilize come the new week?
Well, I mean, clearly this was a story that has grown over the period of not just weeks, but months, and to the point where it was pretty evident that Flynn would be pleading out. And it was just a question of when it would come to play. So here we are on the same day that the working on the tax vote, but the volatility that we saw here on Friday it's all a function of then what's led up to this. We take a look at a market which just had an exceptionally good move in the last 10 days. There we were, middle of November. The market had a minor correction. We get some very, very short-term oversold readings, if I look back, I like to look at seasonality. And there are certain times of year where it really lends itself to some nice, clean analysis. As you get through this October through May stretch, that's one of those better parts in terms of being able to do the work. And as you move through the summer, it can be fairly choppy because we tend not to have the stronger upside biases. But when you have a stretch like we did this year, from May through October, where the market was extremely resilient, not giving up ground, about half of the years when you look back on the S&P are like that. And when you then have the market start to exhibit very good strength into late October, early November, the probability of pushing through with one of these vertical style of moves into the early part of the following year is just exceptionally high. So, what we'll be looking at, I've got a number of technicals that we'll be monitoring here in this next, probably 6 to 10, 15 weeks, that stretch, to see when there might be a potential top. The work that I've done, I'm very happy with. We're probably, as I say, strength into the early part of the year. If characteristics are right, it could actually then gain some further momentum as we move into mid-March. But as we get into the first part of the year, we'll have some criteria that we work with for the readers.
Yes, well, we were promised that you would take a look at the first quarter of the new year because, that sets the tone. I remember a few years ago, January 25th, a Black Friday. Is something like that bound to happen again, or should we slide by that?
Well, it depends on how we wind up into this. If we have a steady style of moves, such as we were having the last week and a half, excluding Friday's market action, that type of movement that can continue on right through into March. And if you think back, and there was a year there, I'm trying to recall what it was, like 3 years ago now, where we had those consecutive weeks of just up in the first quarter of the year. It's not all unusual. Maybe a quarter of all the years will do that. So it's the style of corrections that we have along the way. Minor ones can be allowed. Deep ones, like the worst case scenario I would look for, would be the 150-day moving average on the S&P or the Dow. That might take us back to the breakouts of what we had in terms of a September-October high. That'd be probably worst case scenario if we had a bad break in the first quarter of the year. So not bear market style. If we are going to roll over into an eventual bear market, because we have had this close to 9-year run rate, or 10-year run as we're going to be into next year, you tend to have a rolling top rather than just a spike high. So individual stocks tend to spike, but indices tend to do rolling tops. So right now, there's the only item that has any sign of a rolling aspect to it would be maybe over on the NASDAQ, which got a little tired. The FANG stocks started to roll over in the middle of the month, but that's about the only sector that I see that's really in trouble right now.
Ross, thank you so much for chatting with us.
Good to be with you, Jim.
Coming up, Danielle Park and the question, do you really need to use that credit card this Christmas? Next on This Week in Money.
Always consult your investment professional before making any investment decision.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYP.V, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Counsel Incorporated. Welcome back to This Week in Money, Danielle.
Hey, thanks, Jim. Happy December.
Well, yes, we're heavily into the Christmas shopping season. We keep hearing all these reports from the Bank of Canada, their biggest concerns. We have mortgages that are too big and too much consumer debt. What can we do about those problems, especially as we go into the heaviest spending season of the year?
Well, you certainly don't need to buy a bunch of junk to have a happy holiday season, and I think actually more and more people are appreciating that and, resisting the siren song of consumerism to get them out putting things on credit that they then have to pay off and make them miserable in the new year. So I think people are being a lot more targeted in terms of their selection, looking online, comparing prices, trying to find the best deals. But at the end of the day, anything that you have to spend that's going to be a debt burden in the new year is really something you should minimize or avoid. The measure of happiness, and there's been some interesting studies that have come out just this week even from the OECD and different looking at what makes us happy, and certainly having a sense of financial viability is a huge part of that. It's like the foundation underneath the house, and if you feel like you're running from paycheck to paycheck and have no stability or you're deeply in debt, that undermines everything else. So I don't think that it's worth it, frankly. And again, obviously you need to have a place to live, and you need to have some food, and you need some clothes, and no one's saying you want to live in poverty, but once you've got your basic needs met, it seems like superfluous consumption is just an empty bucket.
Should people, if they're going to get into the consumerism thing, at least set a budget and stick to it and not find excuses not to?
Yeah, absolutely. I mean, I think one of the things that's gone so wrong in the past, 15 years, let's say, is the availability of credit boomed from, low rates, underwriting, securitization, which took debts and sold them off as investments to a bunch of people. So all that liquidity made was an endless line of credit. So both to the banking system, to governments, to households, to businesses. And so it became, I think, harder for people to say no, for example, to a loved one, to a family member who came to you and said, hey, I need a loan, or I need help, or can you help me get this or that, or kids that had, lists of, this is what I want kind of thing. And I think as rates came down and credit became more plentiful, people sort of lost their resolve, their anti-debt resolve, if you will, and they succumbed to the temptation to, say yes, buy it, and worry about the payment later. And that's how we've really got into this deep hole. It's another way of saying it's the same reason that our residential market, our real estate, was able to get to such an insane price level as it is in many parts of our country, only because people were able to access this credit and take on, higher payments. So because of that, we've really, we're now the poster children. How ironic is this, Jim? At the 2008 credit crisis, Canadians were one of the poster children for, apparent prudence and financial restraint. And our banking system was lauded as least levered and most reliable of any in the world because we didn't have the same degree of strife and need for liquidity injections. We needed some. Let's not get that wrong. We did need some, but we were less levered and less vulnerable in the 2008 crisis than many countries in the world. Fast forward, coming into 2018, what a difference a decade makes. We are now the, poster children for household debt. We're literally the most indebted households in the world relative to income. Many people will point to the balance sheet side and say, but we've made such gains on our assets because look at, you don't worry about the debt because the assets have gone up. Well, the problem with that, as I always point out, I've seen this so many times, is that the asset values don't stay there. You see, when you get into these bubbling conditions, asset prices mean revert. They come back down. If we're talking about real estate, you can easily see 20% declines. In the U.S., they saw up to 50% declines from the peak of their credit realty bubble. So you get this big drop in asset prices, and then people don't have the same depreciation in their debt. Unfortunately, the debt side of the balance sheet stays, and the assets drop way down. So, if we're looking this precarious at the peak of our realty and stock market sort of cycle this time, just imagine how horrible this is going to appear on paper and be in real life for people once the mean reversion comes. So I say, going into the 2018, we have never had a decade in human history when we didn't have at least one recession. So we have now been, 2018 will be 10 full years since the last recession. So we were already in the second longest expansion ever in history. The only time it was longer than right now was 1990 to 2000. So are we really banking on, many more years before we get a recession? It's not statistically it makes no sense to make that bet. And in coming into, the potential or probability of the next recession as the most indebted, least cash liquid, that we've ever been is a very precarious place to be, very vulnerable. And so, as we head into 2018, but for all means be optimistic, look on the bright side of life, as Monty Python likes to say, but by all means also be aware of these cycles, be aware of the precarious nature of this expansion, how we're so overdue for the mean reversion, which means that you'll see a drop in asset prices and the stock market, that unemployment will increase again. And, the way people get through those periods is by having stored fat, by having less debt, by having cash available to draw on as savings, not in, highly illiquid things, not stashed in, cryptocurrencies and things that people are going to need to sell to get cash to pay their bills, but I'm talking about savings actually in cash that's available now. And so that's the thing that you really have to keep in mind. Do yourself a favor for Christmas and for the new year and think about that, how you prepare now for the winter.
If you do use your credit card, pay it off at the end of the month?
Of course, of course. I put a clip on from a trustee in bankruptcy that Rob Carrick did a video piece with this week from the Globe and Mail, and he is one of the few people. Very little do you hear the financial industry or financial advisors cautioning people about paying off their debt before they try and do investing, for example. And he makes that point in that clip, which is why I put it on my blog this week, which is to say, listen, if you've got all this, credit card debt and lines of credit, don't bother trying to put money into a TFSA or, put money into a savings account at the bank. It makes no sense. Pay off whatever debt, get it reduced, because if you, need to use your line of credit later, if you have a problem or you lose your job, you can always draw on something like that later. You don't need to, pay high interest to create the facade of having actual cash. And, and you and I have talked before, one of the other major problems facing Canadians today is they are so overextended on their housing that they, will be paying off that mortgage for many, many years. And that really, because you really should get rid of debt before you get to, quote, saving and investing for retirement. I know that's highly controversial, but that is the reality. The problem is that most of the financial business, they laugh when you say that because people have such big mortgages that they're like, well, if we told people they should pay off their house first, we wouldn't have any money to work with. We wouldn't have a job. We wouldn't have investing to do for people. And, that's a very self-centered perspective. The truth is that people should pay off debt and build up savings, and then they have something that they can work with, in terms of what should I be doing with this to protect the principal and grow it, prudently over time. So that's the second part of the financial puzzle. So I always say, if you're with a financial advisor, doesn't ask about your debt level or doesn't tell you that you should try and pay it off before you bother trying to give them money to invest, or God forbid they suggest you should borrow money so you could invest, I say run as fast as you can.
How many say borrow to invest?
Unfortunately, I think it's quite a common approach. It's how they say they turn little people into prospects worth having, is by getting them to borrow and increase the funds available for them to put into various investment products. So it's quite a common one. I hear, unfortunately, many bad stories about that every year. And typically in very speculative phases like the one we're in right now, people that have been, trying to keep their head down, do the right thing, pay off debt, build up savings, just gradually working away every day at it. When you get into a very manic speculative phase, which we've been in for quite a number of years now, but it's really at a fevered pitch at the moment. You know, you've got the cryptocurrency news, you've got Bitcoin hitting a new $1,000 threshold, you know, it's up 1,000% year to date and all that. It takes a very strong mind and will to not succumb to the madness of crowds and not start doing things like trying to, you know, take whatever savings you have and dump it into some of this stuff. The point is, if that's your approach, you're going to get creamed. You know, you really have to have a much more steady, reasonable rule set around what and how you manage your finances. And it is a slippery slope. So, you know, even people, I read an article about someone who had bought into something that went up a ton and, you know, like nonsensically for no investment purpose. There was just luck, you know, and they then sold it and took some of their profit. And their reaction was, you know, I was so relieved to get out of that because I knew that I wasn't earning that money. It was just some kind of a wild lottery style thing. And at the end of the day, I kept lying in bed at night thinking, you know, easy come, easy go. It can evaporate just as quickly as it came. Again, this has nothing to do with investing. This has nothing to do with prudent finance. And as I always say to people, if you want to do something like that, then treat it like you do when you go to a casino. And hopefully this is what people do. If they're going to go to a casino for entertainment value, they say, okay, honey, what's the 20, 40, 60, $100 that we can afford to lose that won't upset our lifestyle or our future plans or make us feel ill, you know? And basically that number is what you can afford to toss into things like, you know, speculative stock picking in a frenzy or cryptocurrencies in a frenzy, any of this, you know, that's the category you should keep that in. But for the most of the time, when you're trying to just get your house in order, so to speak, financially, you need to avoid that stuff with the bulk of anything you've got in terms of resources because it's infectious. It creates dangerous mental patterns, and people very often, most often in fact, nearly always, end up either back where they started or much worse in the end.
We'll have more with Danielle Park next on This Week in Money.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com. Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test the numerous targets located by recent groundwork will commence later this year. Please visit our website at rmroyalty.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Canada's energy future. Of course, we have lots of oil and gas, but we know it's going out of favor across the globe. So looking ahead, electricity will be used. The Site C Dam in northeastern BC, highly controversial. Billions have already been spent on it. If they stop, that means they'll have to pay billions in penalties for contracts that have already been signed, and they'll have to rehabilitate the land that's been ripped up. Or they can go ahead with the project and spend even more billions. Is something like that needed, or can we look at other sources to power the electric cars that we expect to fill our future highways?
Well, I think that things are moving very quickly. I think that the rapid nature of our computing power is changing our reality on a yearly basis here. So people, it's understandable that misallocation decisions may have been made based on old tech assumptions or ideas about how rapidly we could evolve to new energy sources. But the fact of the matter is, it's happening very quickly in terms of potential. Now, what's not catching up quite as quickly is, the political will, the corporate interest in some of the status quo businesses has remained in old textile, and so some misallocation has definitely been happened with resources. And some of these projects, to the people's defense, you plan something like a mine, for many years, and it takes forever to develop, or same with a dam project like that. But that said, we have to assess the facts as they are, and if we're putting in waste lost funds because it's based on an old model that's no longer the most efficient or relevant, we have to realize that we need to stop and reassess what's the most efficient option at the time. So, for example, we have many standing reservoirs and bodies of water. We have geothermal, we have biomass. These are major sources of energy that are available right now if we would just tap into them. So in other words, instead of making new dams, for example, it's not necessary to do that. We could capture hydroelectric power in various ways without having to create the impact and the flooding of new dam systems. So I think, it's tricky, it's happening quickly, but we have to be on our feet, we have to be flexible, and yes, if that means sometimes cutting losses, that's what that means. Costa Rica was in the news this week because they've spent nearly 300 of the last 365 days running entirely on their renewable sources. So they have a lot of hydropower, they have wind, they have geothermal, and they have biomass and a bit of solar. So that is, happening right now. It is possible. I think, our mistake, and probably it's because we come at it from a corporate model often, it's about where profit is, so we'll say, well, it'd be better if we went and produced a whole bunch of solar panels, or if it'd be better if we went and produced a whole bunch of windmills. And yes, I think solar and wind are part of the solution, but what if we don't have to spend all the energy, resources, and water creating all these products for companies to sell? What if we could literally tap into some of the sources that are, for example, right under our feet with geothermal? So it is, it's a complex, moving target right now, but the upside is we have everything to gain. And the thing about all the OPEC talks and, trying to keep the price of oil up while holding back production. I mean, Canada we just started pumping a huge resource of oil off the East Coast that came on stream, and that is happening all over the world. So they can cut supply or hold back supply as much as they want. It's just being filled in by all these other sources. So really, this is just a sign of the times that we're transitioning to a new era. And the quicker Canada gets on board, the faster it's going to go. Because right now, the bulk of our exports is dependent upon fossil fuels and car parts. And both industries are in the midst of a massive downshift. If you believe any of the the SEBA studies and many others that are talking about the direction in which autonomous vehicles are taking in terms of how few cars and automotives are going to need it in the next 15, 20 years, then really you have to look at what other way can we generate revenue as a nation besides making these things that may no longer be needed or wanted in the same demand in the world. So it's a question of thinking outside the box, trying to push back on the status quo that's trying to keep you in the past and find a way into the future. And I also think that the new model is less about how do we make more and increase GDP and increase sales. In the post-debt bubble era, I think it's going to be how do we get more for less? How do we get it so people don't need to spend as much? How do we get more efficient with the resources that we have? And that is going to be quite a challenging business model for the current system, but it's certainly one we can adapt to, because the other options are, to just, everyone goes bankrupt and then what? And that may indeed be happening anyway, because we've got so much debt in the world. So once you can't keep adding debt and increasing consumption at a forced rate per year, then you have to get a lot smarter. And I think that's where we're at right now.
You were telling me before we started the interview that there's now a new smart window that's 11% efficient at capturing energy and turning it into power. What if all those big office towers across the nation were covered in those energy generating windows?
Yeah, exactly. So there's another example. You don't need to make a new dam to create this. This energy is just here right now. It's a new smart window. The National Renewable Energy Laboratory has got a prototype of it, and they have tested it up to 11.3% efficiency, and it just replaces the windows on all the, you can put it on any application, but obviously some government buildings would be the first place to start. Government buildings, because we all have an interest as, municipal taxpayers, for example, to keep our utility costs down. This is money we're spending, in terms of investing in infrastructure to bring energy online. This is money we're spending in utility bills for, governments that taxpayers are funding and that individuals and their houses and businesses are funding. So we have an obvious interest in increasing the amount of available energy with the least amount of expenditure and cost. And that includes the environmental harm that in the cost figure. So yeah, that's just another super exciting thing that's evolved in the last, year.
There's also a plant, Carinata, I think it's called. It's very much like canola, but it's great at producing biodiesel, suitable for using in jets, for example. And it's a plant that grows in wasteland that other plants just won't use.
Is that right? I haven't heard of that one. But, I know that they're getting gas off of degrading various products is another huge area for energy. And again, if you look at the amount of recycling of stuff that we're doing right now in the world, it's pittance. It's very little. A horrific example is the plastic bottles, where even though, in many jurisdictions they're not collected yet, or in commercial landlord scenarios they're still not collected. The Starbucks of the world are pumping out all their plastic, and in many cases they don't have arrangements to recycle. Many businesses are like that still. And the horror is that even of the stuff that's being collected, in 2016, there was about half the bottles that were collected were used for recycling, and the other half went straight to landfill or end up in the ocean. And only about 7% of the new bottles that were being pumped out, at the rate of, by the way, about 1 million bottles a minute is what we're currently producing plastic bottles at in the world. Only 7% of those were actually out of recycled materials. And mostly they're out of new bottle materials. So, we have to look at not just how do we collect and recycle, which is a huge part, but how do we stop creating in the first place? What can we do to stop this insane track we're on, which is just wasting and devastating? And, everything we produce on Earth doesn't get sent to another planet. It's on Earth still here with us. So we might as well get smart about reclaiming it and using it as fuel of what we've already produced, and then find ways to not produce it going forward. So again, this is where technology and computation can come in, computers. It can come in huge, but we have to be open to it, And the tragedy of for example, the U.S. Tax stuff that's going on right now, and, stock market soaring on the expectation that big companies might get even more profits to buy back their own shares with because, that they pay lower taxes. The reality is that the U.S. is already the lowest tax industrial country other than Ireland in the world. They don't have a value-added consumption tax, and they have massive debt already. And this proposal to cut taxes for, corporations and primarily wealthy people is just going to add to the debt. That's how we've got the debt in all the governments the way it is now. For the U.S., it was declaring the war against Iraq and the war in Afghanistan while they were cutting interest rates. You know, in the old school mentality many decades ago, if you had a war effort, you had to raise revenue in order to pay your bills. You didn't cut taxes and try and do that at the same time. The same comes right now. We're at the tipping point where we need to have massive investment to increase the efficiency and improve the economy of the world for the future, for society for the future. And now is not time to be cutting the money we have available for that investment. And unfortunately, you know, this talk about giving more to corporations, they have literally been spending it all on financialization gimmicks, on buying back shares and flowing money to shareholders. Like, if we don't get a grip here, we're going to have a massive social upheaval. You know, it's going to make the French Revolution look like a rehearsal. I mean, it's insane. We're robbing everything that matters to recycle money into people that already have enough, you know, or should have enough. And yet there's all this smart stuff available that's dying for investment. So I think we're going to get to a tipping point, as I say, on all these things, and I think it's pretty close here, where it's no longer acceptable to do it. And then I think finally we'll get some change, but it'll probably also take the next recession and massive bear market and the revealing of who's been swimming naked and all that stuff again. And then hopefully we'll get some better ways to implement things that matter.
Do you think sometimes, like the latest scandal going around movie execs and high-powered people abusing women, do you think stories like that sometimes come out to hide the real things that are going on around us, including an economy that might be just riding on a false bubble?
Well, I think that there is an awful lot of distraction going on in the world right now. I think that in many ways President Trump's whole stick is about distraction, about creating, chaos and sort of throwing people off the scent of anything that really matters while he slips in whatever agenda, he and his cohorts think is the one they want, so to speak. So I think there's definitely a lot of that. And if you're watching any of the news at night, I have a profound sense that we're, staring at minutia, that this is a Dr. Seuss stars on thars sort of who's got what where, and no one's really paying attention to the big issues. But having said that, I also think that this is a tipping point too in this, speaking truth to power, which, there's been an awful lot of dominance by, and this goes in ways in human society, and I'm sure we're never going to expunge it completely, but there's certainly a pendulum that swings back and forth between the people that have all the wealth and control, and typically, unfortunately, abusing that, and that's sort of a symptom. I don't know if it's a psychosis that often comes with human beings. Maybe we're not, cut out to be all powerful and ridiculously wealthy. Maybe it somehow perverts our mind. I don't know, but it seems to be a fairly common trait. And so I think maybe this news flow that's coming out, it's partly in response to a president, for example, who had numerous such allegations and then went on to become elected as president. And now you've got this farcical kind of, him commenting on, other people, and then you've got all these, like Charlie Rose and Matt Lauer, and these people who were interviewing each other about, alleged improprieties as one kept falling after another. And, it's sort of like hypocrisy has just come to a boil.
Danielle, thank you so much for being on This Week in Money.
Thank you, Jim.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite, her website, jugglingdynamite.com. Coming up, we'll discuss Bitcoin mania with Mike Swanson from Wall Street Window, next on This Week in Money.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMYresources.com.
I'm Larry Reaugh, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, AMY, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. I'm speaking with Mike Swanson, editor of wallstreetwindow.com. Welcome back to This Week in Money, Mike.
Oh, it's great to talk with you.
You are being emailed to death, and I'm sure anybody in the financial world is, about the phenomena that is Bitcoin. It's taken on a life of its own.
Yeah, well, it's interesting. It's really becoming a true mania, even among the general public now. This morning I was looking at Google Trends, which will give you a report of search engine traffic. And in June and July, I thought that Bitcoin was becoming a mania, and I was getting emails about it then. But nothing like now. And the Google Trends thing is showing that there's double the people looking up Bitcoin on Google than it was just a couple months ago, as the price has exploded. And what people are emailing me is basically what asking is, should I buy this? What's going to happen? Is it a bubble? And so forth. And I think we can answer that by looking at what Bitcoin is actually doing. There's lots of people making big claims about the future of Bitcoin. For example, there's two basic arguments that I'm hearing is that Bitcoin is an alternative currency to the dollar, or Bitcoin is going to just be the future and everyone's going to start buying it or trading it or using it as a currency. So therefore, they argue that it's just going to go up for years, and this is just like this new thing that's only beginning. And my thought is this is exactly the sort of stuff I heard in 1999 of the internet stocks, because the internet was a real new thing, but all these internet stocks appeared out of nowhere, and they went up like bubbles and had huge runs, and then they were bankrupt and worth nothing, most of them. I mean, Amazon, eBay, Priceline, they were big stocks back then, which are still around, but many of the others are gone. And I think Bitcoin is something similar. We're seeing this new thing in cryptocurrencies and using transactions with blockchains to do things. But most of these currencies aren't going to be around, and I'm actually dubious that Bitcoin itself will actually be used as a currency on any regular basis once this run is over. However, I don't think the run is over, and I don't actually think it's an alternative to currencies. And the reason I say that is you can do a correlation measurement of how something trades against, how two markets trade together or apart from each other. So, for example, gold is known as being a counter to the U.S. dollar. And if you use this correlation analysis, it shows that there's actually, I looked at a 200-day average of this, and there's a negative 0.9 correlation of the dollar to gold, or gold to the dollar, which means when the dollar goes up, gold tends to go down, and vice versa. It doesn't mean it's going to do that minute by minute or hour by hour, but generally speaking, that's a pretty consistent trend. And it doesn't mean, gold's going to crash if the dollar goes up $3 or something like that. But there is a relationship there. Just like the NASDAQ has a relationship to the S&P 500 and the Dow in going up and down with them. Well, what about Bitcoin? So this is where it gets interesting. I did a correlation analysis of Bitcoin to the U.S. dollar, and I found there's actually no relationship. When the dollar goes up, it's just random what Bitcoin does. So there's really no relationship at all between the activity of Bitcoin and the U.S. dollar. That tells me it's not acting as an alternative currency at all. If it was, it would be trading more with gold, actually. So I don't think that's something people are claiming about it, and they just don't think it's real. So that begs the question of what is it trading with? And the funny thing is, Bitcoin is correlated with the U.S. stock market by 0.9 on a 200-day average of activity. So it's trading with the U.S. stock market. And if we think about this, all global markets, except with a couple exceptions, are actually trading together and have been doing this for the past couple of years. And my assertion is that we're in really a basically bubble global financial market system now with the S&P 500. If you look at the cyclically adjusted P/E, it's at the second highest level in history. It's above the highs of 1929, below the highs of 2000, but it's the second highest level in history. Cyclically adjusted P/E is the P/E ratio, an average of the P/E ratio for 10 years adjusted to inflation. And everyone kind of knows this. They talk about, the market's highly valued, but it doesn't matter because interest rates are so low. This has been a theme for years. But this is going on over the globe. We saw a couple years ago negative interest rate yields in government bond debt in Germany and a couple other countries. That's an indication of a bubble in the debt market too. So if you think back to 1999, the stock market averages were going up, the Dow, the S&P 500 that year, but most Americans weren't captivated by that. They were really fascinated by the internet stock bubble that was booming at the time. Now, if you think about today, and what's essentially happening is the market averages are going up again, and this Bitcoin is going up like the internet stocks did in 1999. So this is the most speculative bubble in the entire financial system, not in terms of size, that would be the bond market, but in terms of pure price valuation, it's Bitcoin, because I do think there is value, even though the stock market is overvalued, there is value in stocks, and then they pay dividends, and so forth. With Bitcoin, there really is no value. It's pure, complete, and total speculation. That said, me saying that is I know will make Bitcoin people angry because they want to convince themselves that this is like the total, complete future. My thinking on that is the future is in the currency transaction system, the blockchain system, and what's not to stop, anyone from making their own currency that's more stable than Bitcoin and, to make it easier to do transactions. It's not really a unique thing. There's all these little other currencies and like, who cares? It doesn't matter. Bitcoin's going up just like the internet stocks did in 1999. And what that tells me is we've seen Bitcoin get above 10,000 this week, up to 11,000 actually, and then have a move down, and it's probably going to trade in another volatile range, 20% swing or something. But if it can go up again before the end of the year, above 11,000, I think there's a good chance it's going to really, it sounds crazy, but I could see it going up to 20 or 30,000 in some straight up move in, 1 or 2 months, and then just finally top out. That's kind of the price pattern you see in speculative bubbles. If you look at a chart of the tulip mania back in the 1600s, that's how it ended. And that's how actually a lot of the internet stocks topped out. And silver did that sort of in 2011. It like tripled in 3 months or so. So I could see Bitcoin tripling or whatever. There's no way to predict where it can go to, and just making a climatic top next year. But that would also, be a sign that the financial bubble itself is reaching some sort of peak. Just like the internet stocks, they peaked in March and April of 2000, and the U.S. stock market didn't really roll over into that fall, but it was a danger sign. So I think Bitcoin top at some point next year would also be a warning sign for the financial markets in general.
Mike, is Bitcoin taking all the money that normally speculators would put into gold and silver?
Yeah, yes and no. What Bitcoin is doing, it's not really acting as an asset class for institutional investors. Because it's which gold and silver are doing and bonds are doing. There's not like mutual fund managers or investment advisors put in 20% of their money in Bitcoin. However, the speculative trading in gold really isn't happening at all because gold has been going sideways all year. So and the speculators like to chase price action. It's just not there. With Bitcoin, it is. But there's something else really special about Bitcoin that is truly unique, that actually should really mention, that makes it different even than the internet stocks. And that is that it's something that everyone all over the world is able to trade. They don't have to go on someone in, China doesn't have to go on the New York Stock Exchange. Someone in Zimbabwe can just trade it on their phone. I mean, everyone around the world can fairly easily trade this without filling out complicated paperwork, without even having any amount of money at all. You can trade it with $25. So that actually makes it something that is like, it caps off not just a bubble in the U.S. stock market, but a global bubble. And that's something really gold probably is the only thing that, people or commodities in general that are easy to trade like that. But people aren't really doing that because it's not going up fast enough or it's going sideways. So Bitcoin is it. And this is, a fascinating situation where actually a lot of buying is coming more from Asia than the United States. So, but it's a fascinating time, a fascinating thing to witness.
Is the true measure of a currency whether your government will accept it or not to pay taxes? And I don't know of any government that accepts Bitcoin yet. Well,
I think there's something to be said for that. Another way to state that thought would be that for a currency to work, it has to be easy to use in transactions. It has to be a good store of value. And Bitcoin is difficult to use to pay your taxes with. For example, let's say I had $30,000 worth of Bitcoin in an account, and I know when April comes, I'm going to owe $10,000 to the U.S. government. Well, I got this $30,000 worth of Bitcoin savings, but I've got no idea what that's going to be worth in April. It could be worth $1,000 if Bitcoin were to crash. So that's not a stable store of value. Of course, it could be worth $100,000, but there's just no way to know. And currencies to be workable have to be stable. So I mentioned Zimbabwe. They experienced extreme hyperinflation for decades. Venezuela has also experienced horrible inflation, and Argentina did for years. In countries where there's horrible inflation, their currencies become displaced by a more stable currency, usually the U.S. dollar. So in Argentina, all these other countries, there's a black market, right, for U.S. dollars. What I'm saying is that the actual fact that Bitcoin rises in price makes it so it's very difficult for anyone to use it as a currency now. I mean, if I were to go to Starbucks and say I'm going to spend $4 on a cup of coffee, I'm going to walk in that store. If I spend my $4 worth of Bitcoin and then leave the store, that $4 worth of Bitcoin could be worth $8 or something. By the time I leave the store, you just can't spend money. It's moving up and down like that, or use it as money. It's pure speculation.
Mike, thank you so much for being on the show.
Thank you. Great talking with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Danielle Park, and Mike Swanson. And thank you for listening. Plus, at the end of the show, we'll have company showcase updates from American Manganese CEO Larry Reaugh, Cypress Development Corp. President Don Huston, and Glance Technologies founder Penny Green. If you have any questions for the show or our guests, you can send them to info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh. He's the president and CEO of American Manganese. Welcome back to the show, Larry.
Glad to be here, Jim.
Pretty excited in your office about the news you received from the stock markets today?
Yeah, the news coming out of Bloomberg was a big boost to the company and a very timely boost.
What kind of news did they have?
Well, they talked about the company's recycling and how they thought that that was going to be the next cycle, a bit of a pun there, but the next cycle in the market going up. Everybody's talking about recycling now. And Bloomberg talked about our process, and they pretty much said that we'd be mining batteries, and that's terrific, and specifically cobalt. So I look at that article, and I think, wow, this certainly crystallizes everything for the investors out there. Here, we've been trying to push the cobalt angle for quite some time, and it's quite dominant in the Bloomberg article. And so now, we should be part of the cobalt crew, and they've been getting a lot of attention recently because of the price increases and the scarcity of the metal. So I couldn't say that I couldn't be happier about this article, Jim, because it really kind of crystallizes what we've been trying to achieve for almost a year now, and that is that we are a player in the cathode metal market, and specifically cobalt. But the big thing that most of these articles are missing is the fact that we can get 100% of the cathode material back. And I think I've talked about this before, but I think it's well worth repeating. And that is 100% means that we can actually claim to have a closed circuit that puts nothing back into the environment, including the water, which is recycled through our process. So anybody else out there, and there's lots of them, there must be 50, 60, or 100 out there talking about recycling, but they don't talk about recoveries. So if you're not getting 100% recovery of the material, you're really not saving the environment. Because if you're getting 70% or 80 or 90 or 95 or 50 in the various cathode metals, where does the other 40 to 5% of the material go? It goes back into the environment somehow. Tailings pond, some compound put somewhere, sent for burning, who knows? But it doesn't. It's not like our process where nothing goes back into the environment. We get the last squeal out of the pig on our process. And I think that's important because that's what the battery manufacturers and the EV companies are going to be looking at. They want to claim that they're better than gas engines, diesel engines, they don't pollute. And the only way they can really say that is if their end product doesn't end up back in the environment. And with our process, that's one thing that we'll be able to achieve 100% for them. So we had a great day in the market. Obviously, the new investors liked it because they were buying the stock, and we moved up 30%, over 30% today, and on a good, healthy volume, and we closed on the high. So let's hope that this will continue into next week. And you remember we had an article, too, from Thomson Reuters And I got another half a dozen articles out of that from other companies that follow Thomson Reuters, and they wrote us up. So I expect that the Bloomberg article will shine more attention on us. So we're starting to become prominent out there as a recycling company. And that's really important.
Larry, maybe again explain for new listeners what exactly American Manganese has discovered and how you do it and where you do it.
Okay, we have actually researched and developed a process for recycling the cathode materials in lithium-ion batteries. And that was a result of work that we had done previously in American Manganese for the recovery and the production of electrolytic manganese metals and dioxides, and from very low-grade deposits. And that process lends itself well to the cathode materials because the chemistries are the same. So that's where we're at. It's got an 80-year history, and I won't go into that. I've gone into it before. But I'll let you know that American Manganese is traded on the TSX Venture Exchange under the symbol AMY. They're traded on the U.S. exchange under the symbol AMYZF. And we're traded on the Frankfurt exchange under the symbol 2AM. And we have now got our number for the Frankfurt exchange, so we'll continue to be listed on the Frankfurt exchange because they changed the rules recently. And so, you know, that's where you can find where the company trades. You can go to AmericanManganeseInc.com to find out what our process is all about, find our releases, find PowerPoints, and you can contact the company here at 778-574-4444, and you can also contact me at LREAUGH@AMYMN.com.
Larry, thanks a lot for the update.
You're welcome.
We've been speaking with Larry Reaugh. He's the president and CEO of American Manganese. I'm Jim Goddard. We were speaking on December 1st.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. My guest is Don Huston, Chairman and President of Cypress Development Corp.com. Don, welcome to the show.
Thanks, Jim. I appreciate that.
Don, what can you tell us about Cypress Development? Where have you been? Where do you plan to go? And a little bit about the company's background.
Well, Cypress Development is a publicly traded mineral exploration company listed on the TSX Venture Exchange, as well as listed on the OTC Pink bulletin boards in the United States, CYP.V, and on the Frankfurt Exchange, C1Z1. At Cypress here, very, very excited with what we're seeing, with believe it, the drilling that we're doing today is in every hole. We've got about 15 holes completed now. We did 9 holes in the second quarter of 2017. We've just completed another 5, and we have another 8 holes in progress right at this time. Every hole, bar none, every hole is intersecting major widths of lithium-bearing rock, being intersections starting at surface, every hole the same, down to about 300 feet with an average grade of about 1,000 parts per million, ppm, lithium content. That translates into about 0.1% lithium content, or using a lithium carbonate equivalent of about 0.6%. And that is a very, very, very acceptable. It's a very good grade. As I say, we're finding it in every drill hole from surface down to approximately 300 feet. And we are looking at some type of open pit scenario on this Clayton Valley Cypress program we have. The two blocks that we have are called the Dean claims and the Glory claims. They are contiguous with each other in a north-south direction. We're developing about an 8-kilometer by 8-kilometer strike length with about a 2-kilometer width. And so far we've been successful, Jim, on every hole that we've drilled.
How would you compare the quality of the lithium that you're pulling up to your next-door neighbors at Albemarle?
A little bit of apples and oranges. I hate to use that description, but it is so. On the Albemarle, they have been producing lithium out of the brine water underground. It's saltwater aquifers that lay under the desert floor, about 500-600 feet down. They drill a hole, they pump the brine water out and put it into huge evaporation ponds on surface and let the sun evaporate off the water, and then scoop up the minerals that are left, the powders that are left, and then process and extract the lithium. Their lithium content at best is about 200 ppm out of the brines. We are on Cypress's ground. We're I want to say the word hard rock, but we are in rock. It's called claystone. It's volcanic ash that has come down and settled on top of the aquifers. A million years ago was a lake bed, but we're finding that the lithium content in the rock above these aquifers are containing lithium content of, as I've mentioned, 1,000 ppm. This is 5 times the production that is garnered, that is known, public domain. Pardon my stumbling. At 200 ppm, and so we think that with our grades being 5 times the size, not having to go down 600 feet, pump water out of the ground, we think that we can mine, mill, process this lithium rock that we have sitting at surface very economically, and we think our grade is it's a skookum grade. We've got a very, very good grade here, Jim.
I can tell you're Vancouver-based.
How was that? Skookum, very good. Yeah.
Don, how can people find out more about Cypress?
Well, there's info at cypressdevelopmentcorp.com, and of course and that's CYPRESS, Development Corp, all one word. There's also the website, cypressdevelopmentcorp.com. There's telephone number 604-687-3376, and a toll-free 1-800-567-8181.
Don, thanks a lot for the information.
Thanks, Jim. I appreciate you giving me a call anytime.
My guest has been Don Huston, Chairman and President of Cypress Development. Their website, cypressdevelopmentcorp.com. And if you'd like to contact Don or anybody else at Cypress, their email is info@cypressdevelopmentcorp.com. I'm Jim Goddard. We were speaking on November 27th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Company Showcase is a production of Howe Street Media Incorporated. Welcome to Company Showcase, an advertising feature on howstreet.com.
I'm Jim Goddard. I'm speaking with Penny Green, co-founder and president of Glance Technologies. Welcome back to the show, Penny.
Thanks, Jim. It's a pleasure to be here.
I understand Glance has acquired some new technology. Can you tell us about it?
Yes. Well, we just announced today that we've entered into a letter of intent to acquire the blockchain and cryptocurrency with rewards tokenization platform, Block Impact, from Z2DM Limited. And that's a company founded and led by the leading blockchain influencer, Dennis Garda. And Dennis has been ranked number 4 worldwide influencer in blockchain and crypto.
Now, what do you plan to do with this new blockchain technology?
Glance intends to use the Block Impact cryptocurrency platform to accelerate the creation of its reward-based cryptocurrency, which we've previously announced, which is intended to be implemented on the Glance Pay platform. So we hope to complete the acquisition within the next 15 days and then work to integrate the blockchain technology with our existing Glance Pay mobile payment network architecture.
What is the outlook for cryptocurrencies right now?
Right now, the outlook for cryptocurrencies, it's actually gone from $17 billion U.S. 1 year ago to over $245 billion recently, which is an increase of over 1,340% according to CoinMarketCap.com. So this incredible expansion of the cryptocurrency market demonstrates a significant increase in the demand for cryptocurrencies and an increased demand for ways to spend them.
Just how much cash do you have on hand to put all this in place?
Well, right now we have $10.3 million in the bank, Canadian dollars, and we've just announced a bought deal financing for $11 million. So those two amounts equal $21 million. So we're in a strong position to pursue the launch of our cryptocurrency as well as acquisition and partnership deals.
Penny, can you tell us about this technology you're acquiring?
Absolutely. Block Impact is a full end-to-end cryptocurrency blockchain solution, which includes the following features: biometric ID, which is facial recognition technology, blockchain distributed ledger technology, digital messaging and group chat, which is very similar to WhatsApp, a financial wallet, an open application program interface, a crypto token fiat wallet, which allows seamless conversion between currencies, a reward system, encrypted cybersecurity, in-app support system, document sharing, social network features, and a peer-to-peer marketplace.
Now, for our new listeners, what exactly does Glance Pay do?
Glance Pay has several patent applications, and it has a proprietary system that revolutionizes how smartphone users choose where to dine, order goods and services, make payments, access digital receipts, redeem digital deals, earn great rewards, and interact with merchants. Glance has been building a valuable network of merchants and consumers and offers targeted in-app marketing, geolocated digital coupons, customer feedback, in-merchant messaging, and custom automated rewards programs. The Glance Pay mobile payment system consists of proprietary technology which includes user apps available for free download in iOS and Android, a merchant manager app, a large-scale technology hosting environment, and sophisticated anti-fraud technology and lightning-fast payment processing.
Penny, one of the neat things I like about Glance Pay is you use your cell phone, you take a picture of, say, a restaurant bill or the service fee you might get at a workout place, and it pays it, and you don't even have to worry about it after that.
That's right. You just pay with your phone. You don't have to worry about dealing directly with the waitress once you've paid on your phone. And our app keeps a record of your expense and also keeps a record of your rewards that you can redeem the next time you use your app.
I guess you just remind your waitress, hey, I'm paying on my phone, so don't worry about me. I haven't split.
Exactly.
Now, where is this traded?
We are traded on the Canadian Securities Exchange under the symbol GET, and we're also traded in the U.S. on the OTCQB under the symbol GLNNF.
Penny, where can people find out more about Glance Technologies?
Go to one of our websites, glancepay.com or glance.tech.
Penny, thanks a lot for the update.
Thank you, Jim. It's been a pleasure.
I've been speaking with Penny Green, the founder and president of Glance Technologies, on November 30th. I'm Jim Goddard.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Company Showcase is a production of House Street Media Incorporated.